our weekly update of kind of what's going on in the market. Did a little bit of a teaser on Friday when we posted about this coming up, about some bad getting bad, some bad getting good, Portland in general, perception, rates, and there's a lot of moving pieces. So we may go off on the deep end here a little bit on some theory and speculation, but kind of a revised theme here that we're going to kind of go with for this week, and in general is opportunity is knocking, and we're going to talk about why, or sort of my thoughts as to why, based off what I'm seeing and some just data interpretation, if you will. So bear with me as we go through some of this stuff here a little bit. I'll also say some of this will be repeated in the monthly newsletter that we email out to everybody. So if you are not currently getting our email newsletter and would like to, please in the comments let us know, or contact us and just ask, hey, can I get your email newsletter? I would also say if you're not getting it, check your spam folder, because you may already be getting it, but it's just being filtered out. So anyway, this week's I think is going to be, or this month's newsletter is going to be a good one. Again, repetitious kind of theme. So we're going to follow the theme sort of opportunity knocking, if you will. But first and foremost, that said, let's kind of do the usual kickstart like we usually do with the, hey Jeff, how's the market? So in the Portland area, the lockbox activity for the week over week, and this is every time Jeannie and I open a door for clients or other agents around town, it registers basically a hit on this chart, if you will. So week over week, Portland's up about 2.5% on activity. So here we are, middle part of October, and we're just sort of cruising along steady. We're kind of on par for where we were last year. Again, this is our COVID year. So what's the fall, latter part of the fall, early winter going to look like? Who knows? I think everything's out the window at this point, given the delay that we had, or kind of lost month, 6 weeks or so that we had from COVID early on. So we'll see how the market wants to make up for it. But for now, Portland is cruising along just fine in terms of interest and activity. Meanwhile, up across the river, Washington, they took the week off. So down 5% week over week on their showing activity. I know it wasn't for me because I was up there a few times last week showing some houses. So again, they're in line with last year, so not a big change here or issue, but that's what the market's doing. Still plugging along. Still looks like summertime in the Northwest. So let's going to kind of knock the easy one out of the way. We did talk about sort of the one of the things that bad things get better as part of the highlights. So let's just knock that one out early. Forbearance rates have declined. Not that long ago, we were talking about these having dropped to the 8% level, like mid 8s. So we're just below mid 6s now. So that rate is coming down. There has been some discussion and speculation about as these forbearance periods end and the requests drop off, is it because homeowners have their feet back underneath them in terms of working and income and they're able to make their payments and everything's okay? Or is it there's a wave of foreclosures coming? And I believe we've talked about this on a past weekly update, but if not, there's ample evidence out there that basically says even if there is a foreclosure surge, if you will, coming from this forbearance and from COVID, it won't be substantial enough to really move the needle on the market. So again, if you're trying to time things of waiting for the bottom to drop out to then make a purchase or a change on a house, I think that's I continue to say that I think that's a losing bet there. So, all right. So when it comes down, you hear this from me all the time. When it comes down to how do I look at the housing market in general, it's supply and it's demand, and that's really it, right? In the middle, you have a little bit of kind of commodity pricing. Lumber is going crazy. I can't recall honestly if I've got that at the end of the slide deck or not. If not, lumber's up for the fourth quarter in a row. It's basically doubled in cost almost. So lumber's going crazy. So put that aside though. Let's talk about kind of supply and demand, and we're going to do this in kind of reverse order here. So let's talk about kind of how the demand is looking. Oregonian just ran this story the other day, and I thought it was brilliant. I might be stealing this concept in our newsletter. The title is still being worked on, but Portland is sold out. Basically, there's just no homes. We had last month 1.1 months of inventory. It's the lowest it's ever been since the RMLS has been recording this stat. So we've never seen fewer homes available for sale in Portland. And I'd argue there's not really that much that's going to make this change in a dramatic sense. Certainly as COVID wanes off at some point, that's me knocking on wood, more sellers will be willing to sell their homes, and that's going to increase that a little bit. But I think we're going to end up going from like a 1.1 months to maybe in a prime market, maybe next summer, if that's more normal, maybe 2.5, which is still a far cry. So Portland is booming right now in terms of the activity of the market. And so I kind of want to get into looking at just some other stats here, if you will. This stat here kind of goes back to looking in the Portland metro area. This goes back to 1995, 93, 95, somewhere in the mid 90s for Portland for new construction starts. Okay, so this is new homes that are looking to be built in the Portland metro area. So it goes from the mid 90s through now. And you see the Great Recession. That part's pretty obvious, kind of there in the middle where the bottom sort of fell out. And look at where we've been ever since, right? So if you go back and look at the inventory charts prior to all of this, it's still a far cry from being a balanced market in terms of inventory levels. It was better than it is now for sure, but it was sort of just kind of treading water, if you will, in the Portland area. Since then, we've had a decade of not building what we had been building. Meanwhile, population's growing, millennials are buying houses, people have been moving to the Northwest, so on, so on, so on. So supply, demand, the supply side is completely out of whack here. So that is Portland specific on the construction start. So that's something to kind of keep an eye on. We need more houses. Thanks to Metro and the urban growth boundary, I don't know where they're going to build the houses. We're seeing some construction out in South Hillsborough, Wilsonville, and a few little pockets way on the peripheral. I think if you're a long-term betting person, I think Hillsborough is a good long-term bet because construction's happening out there. The jobs are out there. We'll see what happens. Do we become a twin cities type of thing in the next 50 years? But God willing, I'll be here in 50 years to answer that question for you, but we'll see what happens. And so kind of looking back over time, I just thought that this was sort of an interesting way to look at kind of what happened before and after the Great Recession versus where we're at now. You can see kind of during that run up, builders went crazy building houses. You see the housing boom from the construction. Builders were building anything and everything. It's cheap, easy credit. Everything was great. And then you had the market crash. And so the sales plummeted. So during the downslide of the Great Recession, that's where you saw that excess inventory within pretty much every market around the country got burned off. And since then, it's been a little bit of kind of a cat and mouse. The construction is following the sales demand, and everything's great. And if you look what's happening recently, the blue line is the construction starts. The red line are the sales from home buyers, and we've gone inverted. So the sales have completely outpaced the supply of available homes. So again, supply demand. The demand has spiked. The supply is not there, so it's burning off kind of a greater whole, if you will, over time. So that's on a national basis, and you always hear me say national doesn't matter. So let's go local on this. And I've shared this chart, a lot. This is me kind of tracking back to the 90s, late 90s, and this is inventory. So we're 1999 through today. The blue bars is basically the month's reading of inventory at every point along the way for the last 20 plus years. So you can see kind of the spike in the middle was the Great Recession when just nothing was being sold, all the way to kind of current day. So the green bar in the middle represents essentially what would be considered a balanced inventory market, meaning 4 to 6 months. And what inventory means is at the current pace of sales, how long would it take for every house that's available for sale to be sold? So they say 4 to 6 months is the balance part. So the green bar is sort of your balance. So if you go back to kind of in the 90s, early 2000s, we had periods where we were a little bit flush, whether it's pace of sales or supply, and I think it was more of a pace of sales back then. Things look pretty good. Inventory tanked leading up to the Great Recession. Great Recession hits. Obviously, inventory spikes, and we haven't seen it anywhere near the green band since then. And meanwhile, the orange bar, this is the result. Supply, demand, when it's out of equilibrium, that's what drives your prices by and large, right? So that orange bar continues to more than recover from the Great Recession impact, and Portland prices just keep plugging along. So one last thing, and I've shared this one before, but this just bears repeating, and this goes back to February. So I'm hoping I can get an update on this chart. But this was a snapshot that came out in February, and obviously our condition has greatly worsened. I don't recall what our February timeframe inventory level was, probably low 2s. We're since then half that now. But Oregon led the nation in housing deficits, basically a 9% deficit. It's the biggest one that we've seen within the country by far. So, whether we've made some strides, whether we're going to make some strides, it's just you just something that's just worth looking out for, right? So again, supply, demand, we're out of whack. Hey, and there's my lumber slide. So I just throw this out there. Sort of, this is that last piece on the supply side that that's going to kind of factor in. Lumber prices have gone just haywire lately. So this is a little bit of from tariffs related to economic squabbling, if you will. Trudeau and Trump going at it somewhat to an extent. I think this part will probably get worse. The wildfires took out some inventory and means of production. Lumber prices are up, so you're probably in the $16,000 to $20,000 per home added just because lumber is more expensive, not because the homes are any bigger, but just that raw commodity. So that's kind of that's where your supply look at things. So let's shift gears now into the demand side, right? So where's this demand coming from? It's kind of all pent up, and the easiest way to explain the demand of why we're seeing what we're seeing right now. This is your look back, and I believe this goes back to the 70s, 1972 or something. I don't even remember. Took all the labels off. These are your average rates for 30-year mortgages from the 70s until today. So yes, the big hump in the middle, that is not the Great Recession. That was from the 80s when people were probably happy to have a 14% mortgage. So how they even sold houses back then, I have no idea. But since then, the red line simply is a notation of where we are today on rates. And this most recent measurement is basically showing a current rate coming out of the Fed being recorded as 2.81% on average. So that red line then just goes backwards. You can see how far apart we have been historically from where we are now. These are the low rates, right, from ever. So that is currently pushing a lot of your demand, because that affordability, even though prices are kind of doing that vertical approach like we saw earlier, with the mortgage rates coming down, it's actually more affordable to buy a house. It's kind of dispels logic, but that's, that is what it is. So there's an article that came out from Forbes that was kind of talking about this, and basically posed the question of how much lower can rates go? And this is, I think something that is definitely worth talking about, because as you saw that in that last chart, rates have been higher. We're at the record low. So it becomes two questions, right? Could current mortgage rates go lower? And the answer is, yeah, maybe. Could rates get higher? Yeah, absolutely, because you just look back in time. It was 14% back in the 80s, and we'll never see that again, thank God. But the upside is more likely than the downside in terms of pressure on rates. So it's just something we're kind of showing here. So within that article, it kind of talked about they're expecting rates to stay low into 2021 just from the coronavirus and the economy. You got the election coming up. So you got things that could be pushing the rates up, but it's kind of one of these, we have to kind of wait and see what happens. And so this is where we start talking about the opportunity knocking, right? So what do we have now in terms of the opportunity? We've got supply is constrained, probably will be constrained for a long time. Right, 1.1 months of inventory. I don't know how we build a lot of homes that's going to move the needle in a meaningful way. And we're talking about rates staying low, so that's going to keep fueling your demand. So that's sort of, we're at that opportunity where, while it's a little bit more challenging to buy a home, if done right and you're working with the right team of people, it's completely possible. It's not that hard. If you're looking to sell a house, it's a great time to be selling because inventory is low. People are clamoring for homes. A lot of homes are moving rapidly. Those in the jumbo price range tend to see a little bit slower time still, simply because jumbo loans are still a little bit problematic for a lot of people. But by and large, it's a great time to be doing this. So let's talk about that. It's a great time. So it's a time in the market in that we've got low rates and everything has sort of gone haywire, right? So it's all about the mortgage rates at this point. We know prices are going to keep going up. Let them, right? I own a house. I want my price to keep going up because I'm building wealth and equity for my family, and I love it. That's the whole point of owning, half the point of owning a house, if you ask somebody like me. I guess the lifestyle and all that too. But so you've got rates that are low, and what's keeping them low is basically a stalled economy, right? The economy's gone to the tank. We're having to put out stimulus. Everything's just sort of on pause. We got a lot of people unemployed. We've got this pandemic going on. We don't know what's happening. We've got an election coming up. It's kind of that collision of the perfect storm. And all this goes away probably in less than a year. The election will be done in a few weeks, thank God. We'll deal with whoever wins, we have to work through that process between now and the end of the year, and you get through January inaugurations, but that goes away, and effectively come November 4th probably or 5th, we pretty much know the answer to that one, and the market's going to start pricing that kind of stuff in terms of expectations or volatility within the market. The bigger end piece is the coronavirus, and it's keeping the economy sort of on the sidelines. People aren't hiring. You still don't have a lot of wait staff working. It's still not good. This will go away though, right? We know there's a vaccine that's going to come, some preventative thing. Life comes back to normal, and normal might not be for 2 years, but if we get coronavirus under control next year, the market's going to see that happening, right? The market's going to rally. Things are going to go great, and that's going to allow the Fed and sort of the natural forces at will that start to influence the 30-year mortgage rate to let that rate rise back up. So sort of you have that moment of time where throughout the chaos, if you're in a position to take advantage of this, the rates are low for now, do it. I kind of look back on this similar to how I look back to the Great Recession. The bottom fell out of the market. Prices just plummeted all over the place. Certainly in the Portland area, a lot of homes were being sold for a fraction of sort of that peak value. And there were people who were unaffected by it, who had the cash and had the means, and they jumped on houses. Then they're now selling them at significant profits. And there's a lot of us, that kind of look back and go, wish I had kind of saw what it was and kind of had been able to take advantage of that moment in time. Because that truly, I think, was a once in a lifetime moment. This is kind of one of those. So I liken it to a once in a lifetime. It may happen again, who knows? But this is one of these key pivotal moments where you get this inflection point where the market has kind of stalled and it doesn't make sense. And so it's something that I think it is worth looking at to take advantage of. That's my strong recommendation. I don't think we're going to see this opportunity again, at least if you're an old guy like me in my lifetime. I don't think we're going to see rates like this, for forever. And once they rise back up, I doubt we ever see them again. So I think this is one of those moments in time that's worth looking at. I also talked about now in terms of the kind of supply and demand. There's a big question mark then of, okay, if it's all local, what's Portland look like? We know we love our own town. We know we love ourselves, but how are we perceived nationally in the news? And again, Oregonian came out with an article, and then I think U.S. News and World Report kind of along the same lines. Portland's ranked as the 9th best place to live in the United States, with the radicals and all. And of course the other ones, they take more of the shame, or the calling out the kind of the shameless wild side, the naked bike rides. Still, I've never understood that one, but Portland's a great place, right? We've got some challenging times right now for sure, but again, this is temporary. These things go away. Portland continues to be a good place to live. People recognize that. It's never going to not be a great place. So then lastly, this is the last thing, we kind of keep seeing more and more of this kind of press popping up, but people are talking about the kind of the work from home. And I bring this up some because let's talk about not so much the demand for homes, because the demand is the demand, whether you're working from home or working from the office, it doesn't make that much of a difference. But the personal value, the perception of value of your home on a personal level is becoming more and more important as people now are working from home more and more. So they want to find a place to be able to get into that right house, whether it's the right yard, the right setting, the right home office, the ability to if they need to teach kids at home, they need room, they need space. I think the movement towards smaller homes is probably going away. I'm already seeing people talking about the fact that long-term forecasts are migrating back towards larger homes. Probably not the McMansion style homes again, but bigger than what we've been running. Simply because people need them and want them. And again, if you're looking to make that move up with those rates, oh my God, now's the time to do it. So 61% of the people, can expect to be able to continue to work from home, at least part-time to some capacity for quite a long time to come. We've seen headlines from like Twitter and I think Airbnb, and a handful of other big companies have all kind of made this push saying, so it's completely work from home, or we're going to do a separated space. I think REI built a brand new giant headquarters a long time ago, or within the last couple of years. As soon as the building was done, they turned around and sold it, never even moved in, because they recognized what they're doing right now works, and they don't need this monolithic office space. And lately now, Microsoft's jumping in. They're going to let more and more of their people work from home on a permanent basis, whether it's full-time work from home or split your time 2 days in, 3 days in, whatever the case may be. And I think we're going to see a big impact. Denver is already seeing it. The Denver housing market is an absolute dumpster fire right now of activity. Their market time is, I think, 4 days or something compared to our 38 days. And I think a lot of that is people are looking for those lifestyle destinations who want to get out of the Bay Area. They can live everywhere. They live anywhere. They love that lifestyle idea. So Denver's the hot one for right now. At some point, Denver's going to price people out, and they're going to start looking, where else can I go? I still want that West Coast feel, because West Coast is always going to be the best coast. And I still would submit that Portland is still continues to be the lowest cost in terms of housing major city on the West Coast. So I think everything put all together for Portland, for housing, for us, I think prices are going to continue just to go to the moon. I think inventory is going to continue to stay constrained. So honestly, guys, if you listen to me still at this point, 20 minutes in, sorry, I knew this would be a long one. It's the mortgage rates. So if you're still sitting on the sidelines thinking, I want to do something, but I'm going to wait a little bit longer, I want to wait for fill in the blank. What are you waiting for? My submission is it's a sucker's bet, and you're going to lose this bet, because the mortgage rates are going to eclipse. And once those rates tick up, the game's up. Right now, that house is significantly more expensive because suddenly, hey, my mortgage rate just went up quarter point, half a point. Do the math. God forbid a full point it goes up. You were back in this unbearable world of 3.5% mortgage rates. But you put that on top of that price now, and it's the magnifier. So it's talking about kind of, you're trying to find that bottom of the market. Where is the time to act? And I think that time is now. When does it end? I don't know. We'll see. I think we'll probably have in the middle of next year, but the sooner the better, probably, if you're thinking about doing something. Anyway, there you go. Sorry it took so long. I hope everybody has a great week. If you have any questions about any of this, feel free to reach out, call us. Happy to always talk with us, share thoughts. And again, if you don't get our monthly newsletter and would like to get one, again, let us know. Comment on this video on Facebook. Send us an email, text us, call us, carrier pigeon, whatever you need to do. We'll get you set up. The next one's going out probably tomorrow. So anyway, all right, that's it.